Starting. All attendees are in listen-only mode.
Hey everybody, good morning. Todd here with tradinganalysis.com. Welcome to the Wednesday webinar. And I was just chatting with Tony Lindsay from MotiveWave. They've been hard at work on the new version 5 of MotiveWave, and he's just getting me updated on some of the minor fixes and improvements they're putting in the new version. But this is the new version of MotiveWave that we've been running, and it's running extremely well. So Tony, congrats on a successful beta launch, I would say. How's it coming so far?
It's coming good. We launched the beta on Saturday morning, so it is on our website. Although we haven't announced it, or you won't find any, any screenshots or anything like, telling about the beta. But it's there. Definitely go and download. I know we've had quite a few downloads already. So far, we haven't really had a lot of issues being reported, so I consider that to be a good thing. Although we are going to be launching beta 2 rather soon, so we've internally found quite a few bugs that we've patched, and I'm going to put out in beta 2. But yeah, if you haven't tried it, by all means go down, download it, try it out. Love to get the feedback. And of course, any issues you see, don't hesitate to report them to support.
Okay, awesome. And then just best way to do that is just email in support @.
Yeah, so support at MotiveWave.com. Yeah, any bugs you see at all. We really want to try and get this as stable as possible and as bug-free as possible before, I guess, declaring version 5 being generally available.
Okay. All right. Sounds good. Yeah, it's gone extremely well. It's been a nice transition over to 5. Question from John. Do we have to uninstall the old version before downloading? Good question there.
You can install it over the old version. Alternatively, what you can do is you can choose to install it in a different location, in which case you can run version 4 and version 5 more or less together. There are going to be some little glitches, like if you have custom bar themes and custom chart themes. Unfortunately, those probably won't work too well together. Beyond that, you should be able to run one and then the other. The only thing to watch out for, and MotiveWave will give you a warning when you first start up version 5 and you try to open a version 4 workspace. The data formats have all changed. So what that means is if you open up a version 4 workspace, say that you can no longer go back to version 4. Like you can no longer go back and run the version 4 of MotiveWave because they're not compatible. So what I would recommend doing, if you want to try it out, create a new workspace. If you have an existing backup from another workspace that you have in version 4, just restore from that backup. That should get you up and running pretty quick.
Okay. All right. And if anybody wants me to go over that, or Tony, I'm sure can, or I can show you guys how to do that if you want more on that. Okay. So, any other questions on the version 5 release? Anything to do with MotiveWave while Tony's here with us? We'll take some of those and then we'll dive into the market here. Looks like it's going pretty well. And then Renee says, I'm not getting audio. Well, I'm sure you're not hearing us then. But all right, looking good. So Tony, again, congrats and looking good. Hey, one quick question I wanted to ask you before we dive in, and I'm putting you on the spot here a little bit. These are your pre-built fib ratios within the wave count right here, right?
Yeah.
Is there a way to change those defaults?
For the Elliott Waves?
Yeah.
I don't think there are for the Elliott Waves. I have to go back and look at it. We did do some major changes in how ratios are handled in version 5.
I noticed.
I wanted to change it for a really long time. Originally in version 1, we had the concept of ratio styles and ratio sets. So by doing that, we separated the actual ratios that you choose for a fib component. Separate that from the actual styles, like the colors and everything for it, which at the time seemed like a very good idea, but people just didn't get it. I guess no one's used to that concept, and I totally understand that.
Right.
So we replaced that with ratio presets. Presets were in version 4, but what we've done is we've gotten rid of the ratio styles and sets, expanded on what the presets can contain, and now you just have presets. So it's a lot simpler.
So what I'm looking at is presets right now.
Well, for the Elliott Wave ratios are a little bit different. And to be honest, I forget if you can apply
Okay.
ratio preset to Elliott Waves. I'll have to go back and look at it.
No problem. I'll follow up with you on that one. It's not an issue. I knew it's all different, so I'd figure I'd give you some time to get caught up.
Okay.
All good. All right. Appreciate it, and hang around if you don't mind. I know you'll be on mute, but if anything pops up, I'll yell loud. Maybe you can come in, but I think we'll.
Okay. I'll be listening.
All right. Cool. Thanks, Tony. That is Tony from MotiveWave, and they've been working hard on the new version. That's the charts we're using here today. So appreciate you guys joining. Good morning, everyone. And yeah, bear with me, man. I'm coming at the end of a 3-day flu that completely floored me. Oh my God. If you guys don't have your flu shots yet, like I was planning on getting it this week and I waited 1 week too long. I got hammered. So I'm good. I'm fine. It's just, I'm sure you guys don't want to hear these details, but it's whatever. I'm all about transparency. Like the fever's gone down, but isn't it weird how your body has no ability to control its temperature? Like sometimes you're hot, sometimes you're cold, like wake up in the middle of a total sweat and then you're cold. Like, oh my God, I'm such a baby when it comes to being sick. But there's so much going on in the markets and like so much going on at work. Like life of a trader and entrepreneur, you can't just call it in sick. You got to be here. But I wouldn't miss Wednesday webinar. I like you guys too much. So now you all have all those details you didn't need. Let's dive in. Stock indexes, it's weird. I think, and again, I'm filtering this through my medicine-filled brain. So I'm always kind of hesitant to take aggressive market stances or put on new positions when you're less than optimal. So just know that that's going to be my disclaimer here on the open. I'm not operating at full steam, but from what I see from my medicine haze is the stock indexes are pretty quiet. Okay. Stock indexes really aren't going anywhere. I'm looking at a couple different situations and the stock indexes, but what's interesting is the bonds are really moving, and that's creating movement in sectors and industry groups that are related to the direction of bonds and specifically interest rates. Right. Hey, thanks, Adam. Appreciate that. Sound better. Yeah, a little better. Yeah. Nargis, we'll look at FXY because that ties in really well with what bonds are doing. So, S&P really pretty sideways, and I'm tracking a couple different wave counts here in the S&P. Let me go out to the daily and just kind of give you the context. I'm really not sure where the market's going, and that's something that you'll hardly ever hear an analyst say. Sometimes I go on TV and I'm an analyst, and sometimes I'm here at my trading desk and I'm a trader, and there's a big difference. I don't know where the market's going. I really don't know in here. It could go up or down, but we're looking for quality setups and strong stocks to be long and weak stocks to be short. And that's the kind of market we're in. There's plenty of movement. There's plenty of volatility in here, but we're doing it without a good conviction in where the S&P is going. Basically, the S&P is either going to go very far to the downside or very far to the upside. So it almost doesn't matter in here. The fact I think, what's left in the wake of the 2016 rally is this big 3-wave move. Okay. It's really difficult to call this anything but a 3-wave move. And a 3-wave move suggests correction, which means we should have another significant move to the downside. So as we get out into the daily, what's lacking so far is any kind of impulsive action to suggest that we are starting to move to the downside. The top was here. I believe that was the high priced in August. Let me see here. That high was 21.93, and this high was 21.93. Other equal tops. That's fine. So we're really kind of lacking any 5-wave move to the downside, and that's your first telltale sign that the trend is changing. So far, I mean, you can kind of pull a 5-wave move out of here, and that's what I'm doing with this expanding diagonal. It's really kind of reaching, but it's not technically wrong. ABC up in 2, and now here we are in this critical situation. Okay, this is the only thing I can come up with that says we might have a new downtrend in this 5-wave leading diagonal. Okay, it's a leading expanding diagonal. So then we go up in 2, and now we're starting to break down in wave 3. Wave 3 can never be a diagonal. It needs to be a good, clean 5-wave impulse, which means wave 4 stays out of the area of wave 2, which is unlike a diagonal, which 4 needs to touch 2. So if this is the case, we're in a third wave decline that really should just get hammered here fairly shortly. So we'll find out here if this bearish count is gonna live, and if it does, ratio analysis 3v1. Your target should be around 2113 to 2100. That's going to be the downside target if this wave 3 were to take place. Okay, but I don't have a high degree of confidence in there. So I'm not even really working a bullish count in the near term. This is all that I have for a bullish count. Instead of calling this whole move up, as I just described to you, in A, B, and rallying up in C, I'm calling it the start of a new impulsive rally, which would be, this would be 1 and this would be 2. And then your only option is to begin to break down that red circle 3, which is up and off the screen. Okay, red circle 3 is going to be right there. Okay, so red 3 is going to be a 5-wave move. And as I show you the next smaller degree, that's going to be the beginnings of the 5-wave subdivision in 3. So what you'll notice is that where I've placed this green 2 is slightly lower than current price. So even this count, which is significantly bullish and will call for a third rally, in the near term, it does look like we should have one more little push down in wave 2, because we've gotten a little ABC move, but there's nothing on the rally back up that is a 5-wave move to suggest that we are in a new uptrend. It's the direction of the 5-wave moves that really give you an inclination where the trend is. Even if you're not that good at Elliott and you haven't spent a weekend studying it. Oh, come on, there's that little bug, Tony. Could be a Mac thing. Even if you find that, even if you look for where the predominant collection, or where the most of the 5-wave moves are, that will tell you what the trend is. Okay, so you can see that there is a little 5-wave move here. 1, 2, 3, 4, 5. So okay, that's fine. We're starting to get a little 5-wave move, a 3-wave move down here, and then this has been very choppy, and that usually indicates that the correction is ongoing and we should reach for deeper levels. Once this wave 2 correction is over, then we can begin to rally quite sharply. Okay, just like that. All right, so my point of this is both wave counts that I'm tracking in the S&P say we go from current levels down to about 2050. This one says the 2050 area will be the low, and then we're going to go into a sharp rally. This one says we go down to 2050 area, bounce in a corrective rally, and then get clocked. Okay, so I don't know where we're going right now. Okay, there's no way to tell in here, but I'm prepared in either situation. All right, so the Nasdaq has been stronger, and we have rallied up in a good 5-wave move, possibly ending this rally from 2016. But the issue is, once we've completed the 5-wave move inside of 5, we just and we've went right into this nice zone of fib resistance. So we've just gone sideways. There's nothing to do in here in the indexes. So it's been very quiet. We're holding very few positions in here. We were long some tech stocks. Nasdaq is outperforming. We began to book profits on those yesterday. We had Intel. We began to take off the table, and really just kind of playing it lightly in here. As I said, I have been sick, but stock indexes are a little lost. It's more to do with the bond market in here, and I did a YouTube video last night focused on this. And here's what I'm looking at for bonds. So this is the TLT. It tracks the 20-plus year U.S. Treasuries. In 2016, we rallied in a clear 3-wave move. And now we're just doing more chop, chop, chop. Unfortunately, this is the kind of the complex WXY stuff. Which is common because bonds don't really trend all that much, because the federal government and central bank has their finger right on the control button of these bond markets. It's not a truly freely traded market, but we are looking at a lot of ABC corrections here. So I'm thinking of A, B, C down, little connector, X wave, and then we should do another ABC rally, ABC sell off on the downside. what I like to do is just find the total distance of the first ABC correction, which is going to be right there, marked by W, and then project that lower in the next ABC sell-off marked by Y. 100%, or what you call a measured move or symmetry, is 128.82. That's going to be a nice downside target for bonds, and that's one of my favorite trades in here right now. I didn't want to sell down at the lows here, and I'll set up the trade on a little bit of a bounce here for you. But I do like the bond market moving towards 128.82. Let's do an external retracement of X down to Y. And I have to do this one manually. It's not built into the MotiveWave menu here. There is no, actually I'm lying. Maybe they just added that. Oh, awesome. Thanks, Tony. Ratio analysis, X and Y. There we go. Oh, that's right. They added it. I don't think that one was available in the last version. So we have a little clustering of support here from 132.74 down to 128.89. That's going to be the downside target on the daily. If this thing wants to get going through these key fib support levels, great. Then we could talk about a longer term uptrend in the bond market, but not until you break through 128.5. So from the daily, let's get down to the 195 minute. Okay. And what you'll notice is bonds are actually holding a good little support level here. Actually, let's just do this. Where is my, I'll just do it by hand. So I'm always hesitant if I'm going to be short on a market that's rallied up and rolled over like this. I'm always hesitant to be short down into the 618 and 786 retracement, because that's usually indicating that you're selling an extended market. And you'll notice that the 61% retracement was more or less the low yesterday. And then we also have this major power wave level right here. This is the buy level. This is my custom indicator that I designed to help complement fib. So the thick green, which is the major right here, the major upswing limit entry, this is going to be support as well as the 618 retracement. Just below that, you have the 786. So I don't want to be short down into there. What I'm hoping for today is a little bit of a rally up into the red levels, which would be 3703 and 3760. Those are the major and minor sell levels. Okay, so if I can get a bounce back into 37, you could put a stop at 39, and then I'm going to try to get down to that fib support zone that I just worked up on the daily as far as 28.5 down here. Okay, so that's going to be the play in bonds. If bonds are going to drop, yields are going to move up, and that's going to have two distinct and different impacts on sectors that are moving in here, even without the stock indexes, as I mentioned, because stocks are pretty confused in here. So one market that would benefit from bonds dropping would be the financials, because financials have been underperforming for such a long period of time with low interest rates. They're gonna respond well to move up in rates. The overall market, stock market, might not respond well, and it'll be hard for financials to rally without the overall stock market, but it's possible. So XLF is kind of broken now. I got to figure out how to change it, because they split off the real estate. They split off the real estate assets from XLF. They split it off into XLRE, the real estate. So if you guys are involved in that, I had long positions in XLF and I lost a bunch of money when they made the split, but then they inserted XLRE shares into my trading account like 5 days later. And I was like, oh, okay, that's where that missing money went. So one of the stocks I'm looking at that actually did respond well yesterday was Goldman. Goldman's in a pretty good technical setup. And again, I covered this in YouTube last night. So coming off the lows here in 2016 on the daily, got 5 waves up. ABC moved down, and let me just reload the power waves here. There we go. So we have nice 1, 2, 3 level fib support zone. Plus we have the major and minor buy waves just below in Goldman. So support's into 57.60, 57.20. Okay, so if bonds are going to continue to drop, yields are going to go up. That's going to help help the financials, and specifically Goldman looks pretty good on the top side. The other ones that are weak are staples. And utilities, as interest rates are going up, those guys are dividend payers, not high growth areas at all. They're just dividend payers, and they should continue to come under pressure. One stock that we've been trading with our research customers is CVS. We did book profits. I think we traded this move down, tried to resell wave 4, got bored of it. Our options expired. We cut it at break even, and then the stock went. Okay, so CVS is a consumer staple, member of the XLP, selling off quite well. Love to be short on a bounce back into wave 4 here with a major power wave right there for a wave 5 move down. And again, TLT dropping is going to help that case. So that's CVS. The other one that we're looking at is in terms of, all related to this stuff. If bonds are going to go up, if bonds are going to go down, our interest rates will go up, which makes our currency more attractive. Well, the 19-month question here is, when the hell is this dollar going to break? And, some of you guys may have been following me a long time, and you know that I did a good 5 or 7 years in the foreign exchange business when the markets were really moving. And we did well. We made, I worked for a good company, traded for a hedge fund and everything. And people are like, Todd, how could you give up on FX? It's such a great market. I'm like, really? look at this thing. Forex hasn't moved in a year and a half. Like, I love trading FX. I used to be a professional hedge fund trader, but people are like, you don't trade FX anymore. Like, look at this thing. Who would? It's going to break sometime. It really will. And foreign exchange will be great when it does. But until then, it's dangerous. So a lot of it has to do with the central banks just manipulating their currencies and, keeping interest rates at zero. Everyone's just trying to keep their currencies as weak as possible. Everyone's cutting interest rates. And you can see how hesitant the Fed is to even raise rates with stocks at all-time highs. So steer clear of the dollar. All that little ramble aside, if our bonds do begin to sell off and rates start to go up, that's going to make the U.S. dollar relatively more attractive and has the potential to break us out of this god-awful range. Okay, so I am giving this guy a chance to break. I am looking at an ABC. There's a little harmonic fib pattern there and another one too. So we do have the potential of a third wave break of the dollar. But of course, when you're in a triangle, and I always teach my students this, always give yourself an out. And the triangle usually lasts longer than what you would expect. At some point, this guy's going to resolve on the top side. Just trying to find the end of a range since March 2015 is a very difficult game. One market that is saying that the range in the dollar could be coming to an end is gold. And gold's in a peculiar position here. It did break down yesterday after a pretty good period of consolidation. There's a key support level. If this uptrend in the gold market is going to continue, we really need to hold this zone, 1265 to 1237. That's it. Below 1237, and you want to be short gold, period. I will be short gold. Okay, so I'm giving this uptrend since 2015 the benefit of the doubt. It needs to hold the support zone here. And if it doesn't, I think I have an ABC. Do I have an ABC set up here? I don't. Let me just see if I have this. Oh, I do. Okay, perfect. If we don't hold the 1230 area, that lower end 786 retracement, let me just go back and underline that point. Do or die 1237 is the 78% retracement of this rally. If you don't hold that, lights out. And that's going to leave a big ABC corrective rally in its wake. And this X wave could go all the way to the lows. It could make a new low. It's just, there's no way to know at this point, but it just wants you to go lower. Okay, so, I don't want to be buying it. I'd kind of wait to sell once we get through that 1237, and then you're going to try to break down towards the 1,000 mark in gold. That's going to be either Trump in the office, the Fed finally manning up and starting to raise rates, maybe some, isolated fundamental story with gold, but, we got to figure out what the fundamental catalyst is for gold to drop, but not looking very healthy at the heart of this thing. If you just take all the Elliott Wave away, is this a 5 or a 3? And that's the key question that you need to ask yourself. without getting lost in all the weeds of Elliott, this is all you have to really figure out. It's just Brody was just sitting on my lap talking to Tony on my son before we started the webinar. He likes to come down. I got LED lights that go around my computer screens, and he loves playing. He learned his colors from that. So anyway, we're teaching Jake and Brody their ABCs and counting to 5, and this is really all you need to be able to do to trade with Elliott Wave is say, is this a 5-wave move or is this a 3-wave move with letters? If it's a 5-wave move, it's an uptrend. If it's a 3-wave move labeled with letters, it's probably, this is a counter trend rally to a downtrend. This to me just looks more like an ABC because you get a big corrective sell-off in here, surrounded by one push and then another push on the other side. So this really just looks like a 3, and Elliott doesn't need to be much more complicated than that. It's pretty easy to get lost in all the minutia, but what's the spirit of this pattern? It looks like a 3-wave move to me. And if that's the case, there's a lot of people, including myself, who wanted to see gold below $1,000. And this might be the 3-wave move to get us there. And when gold finally does break into sustained volatility, there's a lot of money to be made there. So I'm looking forward to that, hoping that holds. Okay. All right. Pedro, GoPro. Yes. Sorry, guys. I don't know how the whole time went. All right. I'll stay with you guys a couple minutes after the open, if you don't mind, for my rambling, my medicine head. GPRO. Yes. Actually, I do have the GoPro trade on still. We're going to switch gears, obviously. And I'm using Mac here on GoToMeetings, so it's kind of annoying. I got to do this switch. Okay. GoPro. I have it. Where is my GoPro? Right there. I sold 13.5 puts. I got 23 days to go in GoPro. Stock is acting really, really good. I'm going to continue to trade this thing. Here's what we're looking at in GoPro. Okay, just that conversation we just talked about. There's a decent 5-wave move going on here. ABC down, and then we're in another 1-2. Looks like we should be able to reach for higher prices in GoPro. I sold the 13.5 puts on this pullback right here. We're getting pretty close to max profit on that, and I'm going to roll that up. Probably go into a call debit spread that tries to reach the 20 strike up here. I have a longer term 25-35 call debit spread that goes off like into January. So I do think the stock will continue to come back. Let's just take a look. Twilio is another one. Intel's up 0.5%. We booked half profits in positions yesterday. Intel continues to act great. We did an ABC pullback, rallied up, sold off, retested trendline resistance, broken out. It's now offering a support and beginning to lift higher. So I might try to add to that one. S&P's everything up about 1/3%. Bonds down a little bit. Crude is 49.70. Crude's looking good. Crude's looking really good, actually. Let's get off of the weekly. Kind of weak there. Okay, let's just find the C-wave objective of crude ratio analysis, CNA. 100% is going to be at 53.42. So that's the min upside target. We'll be looking there on crude. Let's do a ratio analysis. We'll do a Fibonacci external retracement of B and C. So what I did first was a fib projection, which is a very specific kind of fib of this trend wave compared to this trend wave. 100% is 53.42. And then we'll do an external retracement of this correction up in this trend wave. 1272 is kind of out in its own at 50.91, but the 1618 matches up perfectly with the 100% at 53.39. Now let me bring in the counter trend swing waves. Oh, wow. The major power wave level is at 53.70 right on top of that fib. Really nice zone just below 54 in crude oil. So we have a little bit of a breakout going. I always like to look at the 786 retracement of the most recent drop. And once you break it, you're free. Yeah, we broke 786 retracement right here. So I think that's a pretty good trade. Crude oil, we want to look higher. The 1272 is there at 55.37, 54, and high 53s. So that's going to be your upside target in crude. That's looking pretty good. Strengthening dollar is obviously not going to help that, but that correlation is kind of broken apart. Crude is flat. Let's take a look at sectors here in the open. Energy's leading us topside. No, I'm going to go hunting for longs in XLE with our research customers based on that. So financials acting well, up 0.73%. Energy's acting well, up 1.13. Real estate's acting well. So financials and energy are leading it today. Apple's still stuck at 113. Everything pretty quiet. Verizon's down. Goldman's up. Okay, let's see what Goldman's doing. You could play a little bit of a breakout trade from that fib support zone in Goldman. As I mentioned, stops would have to go all the way down at the lows, which is not so fun because this is not an ideal entry. But again, we want to see if we can get bonds moving lower. I see a bounce in the bonds, though. I don't want to sell down into that 786 retracement, which is what I opened with. Where'd my wave analysis go on bonds? Oh, there we go. It disappeared. Okay. All right. Yep, I did oil and gold. Yep. Absolutely, guys. And again, thanks for hanging with me rambling. Like I said, I'm coming off of an insane bout with the flu. So hope it was coherent and never enough time to answer everyone's questions. But let me just I'll take a look at silver real quick. We're kind of on a macro theme here today. Where's silver? SI, YI. I'm still not used to these new quotes from IQ feed. Okay. A little funky. A little funky. Yeah, no real feel there on silver. I have to do a little work on that one. Yeah, I'll take a look at Ulta. I haven't looked at that guy in a while. I know he got crushed. Ratio analysis 4v2 and ratio analysis 4v3. I mean, well, and let me bring in the buy waves. Yes, apply. Okay. All right. Decent support in Ulta from 234 down to 222. Decent little support zone there. Maybe, Doug, maybe you get one more push down into there, but that's potentially buyable down in there. I wouldn't buy it here because I think you could do another C wave down, decompose correction. So like another one of those, and then you might be able to go. Yeah, what's GDX doing? GDX was down like 10% yesterday. It was crazy. Up 1.2%, so nothing there. Oh, there's another one I was looking at, which was Newmont. I think NEM is looking for a pretty good sell. That's on my radar for our research customers here. Yeah, so that's all I'm looking for there. Newmont is just a little waveform move back up. This wave 4 should be of the same degree of this little guy here. So not much of a correction is needed. Can't sell down into the lows. That's not our game because you can't control risk just selling through the lows. That's kind of a lazy way to trade. Doesn't really work. You got to be patient, wait for the bounce back into fib resistance. And then you can define your risk as well as improve your reward. So We're waiting for a little bit of a bounce back up in Newmont, along with the miners. Let's see. What's high yield doing? High yield's acting fine. Kind of quiet. I'm just talking out loud. So gold's quiet. 2%. Dollars up a touch. Bonds pressing a little bit lower. Where did my retracements go on? Didn't I do all my work on TLT? Did it disappear on me? Okay. Need to sell a little bit of a bounce there in the bonds, as we talked about. GoPro's up 2.25. That's awesome. Intel up 0.83%. Okay, I'm liking that. Newmont's up a bit. All right. Oh, transports are another one. Transports have acted well, and we're looking to FedEx. Might be time to go on FedEx. I'm liking FedEx. Yeah. Let me just check earnings on FedEx. IYT is acting well. FedEx is at 20th percentile in terms of volatility. So I'm just looking for, anybody got earnings date for FedEx handy? I'm just looking this here. Okay. Oh, they're not until December. Okay. FedEx is looking good. Those transports are coming on. Let me just check IYT. Yeah, looking pretty good. Low implied volatility. Yeah, it's not looking too bad. I'm a little nervous. I really try to not trade less than a 38% pullback. I mean, that's a little shallow. So I'm going to hold off for now, but it might be a mistake. It might be a super shallow pullback. That's always a risk right there, because this market could easily just do this down to 170 and the trade is still extremely valid. So I'm gonna watch this little resistance level 175, and if it continues to act strong along with the industry group, then I'll move in with our research customers. But those are a couple of the ideas we're looking at here. And again, I'm sorry to be such low energy and just kind of rambling, but just hanging on. So just looking at all these questions. I appreciate all the feedback, guys. Yeah, I'm working hard to get better and just drinking all kinds of everything I can drink and all that stuff. So, all right. So great stuff, guys. I did record this one. I didn't record last week, so I know you guys were asking for it. I didn't put it up on YouTube. And there goes FedEx. But I got this one recorded. We'll put it up on YouTube. If you guys want to know where to find these videos, if you want to see the replay, I'll show you where that is going to happen. There's that one. So probably the simplest way is to go to YouTube. There's 3 ways to get it. Just type in Todd Gordon, and these are all my videos. That's my channel right there. So the YouTube, the best trade setups of the week will have this green thumbnail right there. Okay, and then we also put them on. Tony posts them up on his site, MotiveWave.com. These are the charts we're using. The video archive is right there. This is the free webinar you're on right now. Obviously, you're already registered, so you don't need to register, but the video archive is there. And then the other one, trading. If you want to buy best way to trade fib, that's how you do that. And then the other way is tradinganalysis.com, my website. And then I also post them up on my free video section here. And I also put some other fun video stuff up there. I do some YouTube vlogging, and there's the best setups of the week, and everything's right there. So, okay, that's the class. Hope it was somewhat coherent. Thanks for staying with me. And sorry we didn't answer a lot of questions, but I think we got a lot of information to you. And we'll catch you guys next week. And don't forget to sign up for the new version of MotiveWave. And if you'd like to take a trial to our research business, we are at tradinganalysis.com. Guys, have a great rest of the trading week, and I'll talk to you next week.